All right. Hi, everyone. Welcome to the session today. I'll just give it a few minutes for everyone to join in. I see people starting to come in, logging in. Today over here with me is Ihsan from Maybank IB Research, right? Okay. Just give it a couple of moments for everyone to join. I hope you have your lunch ready, or if not, you have your lunch with you together right now for this session. It's going to be a very interesting session because we're going to couple technical analysis together with structured warrants for you to realize your trading opportunities, yeah? Okay, I see more and more people coming in right now. So Nick, 2022 has been a very intense year, right, for the markets?
It goes up, goes down, and go nowhere. Yeah,
Directionless, correct.
yeah. I am more stressed this year compared last year.
I see, I see.
But it's okay. Every distress, every crisis, I always have the what we call that an opportunity. It's just question how we going to utilize that.
Yeah, that's true. That's true. All right, I see somebody say hi, Chegu from Marvin.
Hello, Marvin.
Okay. All right. I think it's 12:30 already, and we shall begin. All right.
All right.
Okay. Good afternoon, everyone. Thank you for taking your time to join us today. For starters, my name is Tucker, and I'm with the Structured Warrants team of Maybank IB. I'll be your host and speaker for today. And joining me here is Ihsan, our senior chartist from Maybank IB Research. He's our technical analyst for today, and he's a certified financial technician with a decade experience in equities. So as I was saying earlier with Nick, 2022 has been a tumultuous and intense year for the market, strained by stubborn COVID-19 cases globally, geopolitical tensions, and supply chain disruptions. So today, Maybank IB is proud to present to you Technically Warrants, where myself and Nick Ihsan will couple technical analysis with structured warrants to indicate trading opportunities to you in this volatile market. So the webinar will be kicked off by me, where I'll touch on the topic of structured warrants, and I'll then hand it off to Nick Ihsan for his charting, and I'll pair with the shares that he has mentioned with suitable structured warrants. And lastly, we'll close it off with an open Q&A where Nick and I will take questions from the floor. So without further ado, let's begin. All right. So for starters, let's discover what are structured warrants. Some of you here today might have or have not heard of it before, or are already trading structured warrants. I hope those who are already trading structured warrants, you tell your friends, your family about the benefits of it. Do share good things to people around you. So what are structured warrants? What does it do? And how does it work? To begin, structured warrant is a leveraged financial instrument that gets its value from the value of the underlying security. So why is it leveraged, you may ask? Because with the same capital outlay, a structured warrant allows you to increase the exposure to the underlying security and offer a higher percentage of return, thus magnifying the potential returns. Secondly, structured warrants cost only a fraction of the underlying securities price. This provides you an avenue to gain exposure to shares that you otherwise couldn't have bought with the same capital. Sometimes some shares, some underlying security will cost a lot to even buy a single lot, right? But with structured warrants, you can gain exposure and potentially more returns at a cheaper price. Lastly, structured warrants are listed and traded on Bursa, which gives you ease and transparency to you because you can easily buy, sell, as long as you have a trading account open. And you can easily see the bid and offer in the market. So to tie it all up, what does this mean, right? Leverage allows you to do more with less. And with structured warrant available to you, it is the exact financial instrument to do exactly so. All right. So moving on to the next slide. Now that, I've touched on what are structured warrants, you need to know that there are two types of structured warrants available to you as a financial instrument on the market, namely a call warrant and a put warrant. So for call warrant, the way I remember is, call to buy, because a call warrant value goes up when the underlying share price goes up as well. They both move in tandem with each other, and call warrant essentially gives the holder of the warrant the right to buy the share at the strike price, or also known as exercise price. A way to look at it is that if you want to buy something, you want to buy at a cheaper price, right? So you get to lock in at a cheaper price to buy the share when it has increased a lot. We all like a good bargain, don't we? Whereas for put warrant, I remember it as put to sell, because put warrant value goes up only when the underlying share price goes down. They both move inversely with each other, and put warrant gives the holder the right to sell the share at the strike price. So imagine when you want to sell something, you will want to sell it at a higher price than the market, correct? And it's important to remember that both call and put warrants traded on Bursa are European style, where it's only cash settled at maturity, only if it's in the money, okay? So like Nick Ihsan was saying as well, the markets are going up, it's going down, right? And like I've mentioned earlier, call warrant value goes up when the share price goes up, while put warrant values goes up when the share price goes down. So up or down, it is important that you got the right warrant that expresses your bullishness or your bearishness. So both of the combination allows you to profit from either direction. How awesome and cool is that to have during a volatile market? Not just that, you can also express your bearish bias and capitalize on the downside of the share through put warrants. So put warrants allow you as an investor to effectively go short on a single underlying share. And earlier in the year, there has been so many trading opportunities to short the market. And to those who are unaware yet, you can consider put warrants moving forward. And just to let you know, Maybank IB is the largest single underlying share put warrant issuer in the market. So bull or bear, Maybank is there for you to realize your trading opportunities. So as an investor, you may find it hard in picking shares to trade or even invest in. You may often find yourself raising your eyebrows like the guy in the slide. And I truly understand that, because money is not easy to earn. That's why we often find ourselves caught in the situation where we don't know which stock to buy. This is why picking the right stock is the most important step. Stock picking is based on its merits and your conviction of its direction. So today, I'll just go through 4 ways quickly. So there are 4 ways in picking the right stock. Number 1, fundamental analysis. This will be analyzing financial statements, conducting financial modeling exercise. Number 2, through our Warrants Watch and Warrants Bulletin on Maybank Warrants website, where the team curates notable news and trading ideas for you. Number 3, event-driven, like the news headline that you see daily, such as the geopolitical tension, supply chain crunch. And lastly, number 4, we have technical analysis. And since we have Nick Ihsan with us here today, I'll pass the floor to Nick Ihsan to allow him to analyze several stocks through technical analysis charting and his thoughts about the potential trading opportunities available. Let's have a warm welcome to Nick Ihsan. Nick, off to you.
Thank you very much, Rekha. Good afternoon, everyone. Assalamualaikum, selamat petang, selamat tengah hari. So, for today's session, we actually combine what we call a technically warrant, because the reason being because I think the awareness of the warrant trading is still pretty much it's not as as equity in nature, but it's also one way for you to look for different kind of opportunity, a decent opportunity, particularly during the market which are quite volatile. Now, I have a few stock in my list for today, but it's not all mean that by all means it's not all is a buy. Some stocks still looking, could have a further correction down the road. But beyond that, the reason why we highlight those stocks, because we believe we combine with the structured warrant that Maybank they offer a decent in terms of the liquidity and so on. So give you, if the stock doesn't look that good right now, perhaps I'm going to highlight you which level the stock going to be much more attractive and so on. Now, I also will highlight a few stocks that I think can be pretty much attractive, but most of the stock is actually you can get it from our Maybank Traders Almanac on the daily basis that we highlighted you. So some stock, I think most of the stock which has been highlighted, it just matter whether is there any room for further upside or actually the breakout is actually incoming or not. Right, so I'm going to share my screen. All right, now few stock that we think looking okay, fundamental, technical, and so on. We start with boosted presentation. I do believe the stock is pretty much still on the correction. One thing you can see here, this is RSI with the moving average. There is a so-called bearish crossover here, and in the momentum is actually declining lower, and in fact it just create a new lower low structure for the momentum. So that tell you that the recent so-called momentum is actually has more intensity compared than much more earlier. So because of that, I do think if you take a look at the chart here, it's still pretty much on the correction. Now, it did have some rebound, particularly within the blue line here. The blue line here represented by 33 moving average. The green here is 13, and the red color is 88. So what are this number? The number is actually a gut number. It's one of the numerology that you can use in technical analysis. But regardless, let's look how low it can go down for what we call it boosted presentation. So you can first seeking so-called low point, recent low, to create to draw your Fibonacci. So it can be this one, this one, this one, or this one. The next question is which one? So I'm going to use this one. Right. The reason why I'm using this one is very simple, because this by right you should be looking on a much more bigger candle. In this case, this one, let's call this A, B, C, and D. Now the reason why I take C, because here you can see the structure. So the structure here has more so-called confluent when the trend continue to go higher. So I do believe at this point we should be much more critical, because this is considered as one of the significant turning point, particularly at the stock start to move up higher. Yeah, for here, I think the difference is not much. Right, so for now, I think here is 38.2. Often the completion of correction could complete within at lower level at 61.8. So we're expecting if there any rebound, it should be kept within 106, 107. This black candle here represent is quite large selling pressure. So eventually we think could be correction to at 84 cents. Before any reversal signal could occur here. I can be wrong, but for now, I think it could actually continue to go higher. But for now, I think because of the structure of the stock right now, by looking for the volume, compared and so on, I do think correction is not yet ended. Now, moving on to the next stock, I think Dialogue, maybe some of you not trade, because one is pretty much more skewed toward institution buyer. However, with the warrant, you have ability for you to participate in terms of the movement of the stock and so on. Now, the stock, I think not for trader, because one, why despite the movement is quite large, but often you can see the stock price. The arrangement of the candle here is a little bit congested. That means the share base is much more bigger, and in order to move higher, they need require more firepower to go push further. But beyond that is pretty much what we call that interesting, because if you take a look, the trend here is down. However, you have seen a certain so-called pattern has been formed within what we call that since September last year. So often this pattern called what we call that triangle can be two things. One can be a continuation pattern, or there can be a reversal pattern as well. However, those depend where the stock going to create so-called what we call a breakout move. Now the breakout move, I think the neckline should be taken within at this level at RM2.84, which actually is not that far off. So the reason why, if you take a look this momentum here, let me just make it bigger. And it's like if you draw a trend line, you get, there you go, a breakout of the trend line. Because a breakout trend line, that means those momentum has exploded. Okay, when the momentum kind of explode, it gives you indication that this price uptrend should be accelerating much higher. So that's the reason why we highlight, dialogue. Now, next is, I think DNAC is pretty much a darling of everyone. The reason being because I think there is a lot of follower for the stock. One, because the stock at once has been in the consolidation mode for a very, very long time until it have a explosive move last, I think early of the year. So I think I have many events last year that we highlight the so-called, triangle pattern for the stock, and those triangle often, if you use Elliott wave, this is pretty much on the wave 4. They mean this is the wave 5. The question now is wave 5 has completed or not. I don't think it has complete yet, because if you look on the structure of the weekly chart here, this could be a smaller wave 1 has complete, now creating a wave 2 of the bigger wave 5. It could, right? Regardless, I think the stock is quite attractive. One, because I think we highlighted much earlier, I think at this candle, and it already hit our target here, and I think we issued a new target already. I think the next target should be at 119 and 108, I think. Yeah, and today the stock already start moving upward, and you can see here there's a new high low structure. Here you still have so-called a bearish signal over here, but in the momentum you have a slightly higher low structure, a little bit higher structure over here, and short-term momentum has started to improve. Now it's set to challenge much more stronger resistance over here at 55, but I think this is to be the so-called make or break level. So that means in order for the stock going beyond or resume their uptrend, there is a need for one white candle to create a so-called either breakout or new base right above 106, which is not that far off of the level. So initially, if the stock fails to break a discount level, I do think that it's going to consolidate, building a new base, and eventually going to try challenge the upper resistance again. Beyond that, long-term stock looking quite very much attractive. So you have an option to buy the stock if it is, and also the warrant, and of course there's such a warrant as well to capitalize on your capital. Now, Gamuda is interesting because of MRT3, resumption of MRT3. I think they gave a significant boost to all, if not a majority of the construction stock that we have. We noticed the first breakout over here. The moment they just on the 1st March, the moment they just break so-called the long-term downtrend line. But that's not what we call that confirmation. The confirmation come in after the stock complete so-called something that we call a return move. Often when a stock breakout, okay, they need to have so-called a return move. A return move is something that you just have as in the pullback as you rebound back above this level, which previously are resistant and now turning into a support. So that gives you confirmation that the trend has changed, from downtrend now turning into uptrend. So the moment you saw this structure, every you see the stock is pretty much on the new uptrend level. So right now for Gamuda, it showcased a similar kind of pattern. Now you have a breakout, okay, a return move, a new base, and then you have continuation of the new breakout as well. Now this new breakout has set up a new a so-called new buyers. So that means the buyers now for Gamuda, instead of downtrend, is now pretty much on uptrend. The question now, whether should you jump in at the current level or not? No, I think if you look at the stock, okay, the pattern of the stock itself, this kind of stock often make a pullback after they just have a big break. Okay, so rather than buying at the current level, which pretty much at the highest point, I suggest you going to wait for a while, maybe perhaps waiting to reaccumulate again, at least within that 306 region, 3 or 310, 36 region. I think that's pretty much more better compared to the current level 3.38, which offer you, I think, pullback could be in the region of 5 to 10%. So that I think would be a much better entry point. However, it could pullback can be minimum, particularly if they did not able to break immediate support at 3.25. We have buy from fundamental. I think the target is over 4 ringgit. Fundamentally looking attractive. We just question whether you want to jump in right now or you want to wait for some pullback. I think pullback should be much more better entry point. All right, now a quick look on the Genting and Genting plantation. Genting is pretty much on the sideway. So I think for the stock, if you're looking to buy, it's not at this current level, but perhaps waiting at a much lower support. So support often, if you take a look at the support, it has been rebounded at least 3 times. Sorry, 4 times over the past how many months already? 6 months. So because of that, the given the nature of stock, I think downside risk buying at the current level, at a much lower level, give you some so-called lower risk entry. That means if you get it wrong, you can cut at very low. I mean, if you, let's say you make entry at 275, your cut loss below 270, that means you risk about 6 to 7 point cent, sorry, cent, in order to switch direction, or sorry, in order for you to cut the losses. All right, same thing. Sorry, genting protection is different. Sorry, most of protection stock still pretty much strong, and you can see here. I think the similar pattern with the boosted plantation over here. This is the candle, sorry, the RSI, whereas it break the support and I try to go up again. You can read RSI just like normal trend and so on. And because of that, the so-called uptick nature is not that strong enough. And take a look here, the trading volume also quite thin. It's quite thin. So this gives you an illusion that this could be a dead cat bounce. Okay, that cat bounce is actually a technical term for the a rebound that not sustainable, that actually could actually bring the stock much more lower. So I think the correction is not yet ended. So it could actually testing the lower support within 8 ringgit 77 37 cent, or perhaps much lower support at 7 ringgit and 65 cent. I think the arrangement, yeah, Genting is pretty much at the support level. The trend is actually down. I think it's down. I think the reason why the same pattern with Genting just now, because of this candle. This candle has sort like changed the overall direction for the Genting, and because of that, every time they try to rebound, it have been rejected. So, and in fact, you have a new lower high structure over here. Hold on. This is interesting. Okay, the momentum has created so-called a higher low structure, but the stock price is a lower low structure. So while this is bearish signal, this is actually a bullish signal. So that means another one time, if the stock able to break 472, create a new high, then this downtrend, so-called downtrend signal, can be nullified. For now, I think there could be a rebound in the near term. Rebound, that means the stock could test 48.72 because of divergent nature of the stock. And if does not happen, then I think perhaps you may think to sell within this zone. Right now, hibiscus, we have quite high target price actually from our research fundamental. So we have a gap down over here. Which is kind of kickstart a new decline already. You have another gap down over here. Okay, you can see the stock trying to close the gap, but there's no follow through. So that means the correction is not yet complete. So I think there is another down leg which we are looking within this level 955. And if you take a look on the right side level here, it actually approaching so-called oversold territory, which is not yet. So that means you haven't seen the rebound at this level. You haven't seen it yet. You yet to test the support, and the moment you have rebound and significant reversal pattern occur within 61.8, I think the re-entry or so-called reaccumulation is pretty much possible within at 61.8 or within 95 cent this level. So you can see here, this is previously strong resistance. Okay, and the only one they're going to break this resistance is one big candle over here. Without this big candle, this resistance never been taken out. So because of that, this will become your new support level, and because of that, I do think correction could complete at a lower level here, and you just need to wait for the stronger candlestick reversal signal. Okay, the next stop quickly on the Inari. Now Inari has a very interesting problem to have. So one thing is the fundamental is decent, but the trend is not. The trend is not good, right? Honestly, the trend is still pretty much on downtrend long term. Okay, long term has turned into downtrend. Now we do highlight the stock to buy today to capitalize on the current so-called strong technical rebound, but the trend has not changed yet. Short term maybe yes, but long term is still pretty much on decline. So I think while you can buy, you have to be extra careful about their current upside. Now take a look from here. You can see the volume profile quite thick at this current level. So that means this zone going to be your so-called major resistance for now. Okay, now the rebound is quite okay. The trend for the medium term, if you use moving average, it look like has turned a little bit, but I do think I don't think it will go up like this. I think eventually they're going to make some resistance before setting up a new base or new higher low structure if the stock want to continue to go up further. So for now, I think the focus should be whether the stock can break 337 or not. The good thing is if you look at the momentum here, it has been fairly support over here. That means this is actually a bullish divergence signal. Okay, you have lower low structure over here, lower low, and you have a more or less similar low for the RSI. And then here, if you draw a line, you can see it has broken your trend line. So the momentum. Now the good thing about this momentum, how strong momentum it is right now, because one, if you take a look the RSI here, the moment it break the moving average, okay, it make a so-called a U-turn or return move and a rebound back above these two moving average line. So they mean over here by interest get what we call that become much more stronger, and as video you can see here when the stock start to gap up, okay, come down and revert again. This candle has changed the direction for short-term movement. So for now, I think we possibly enjoy the short-term movement. If you want to have focus lesser, you don't want to put so much to buy in, you perhaps can buy the warrant. All right. Okay. Now, quick look on IOI. I think the pattern is pretty much similar with all the plantation stock. Okay. I think plantation still not correction is not completed yet. So if you do so-called confluence of Fibonacci here, okay, pretty much you can see there's some support within this level. However, I do think if you look structure here, okay, take a look at RSI here. This is your support. Now become your resistance, and take a look at the trading volume here, drastically declining. So because of that, unless you have a massive blowout of the volume over here, then it is possible to continue. If not, I think it could actually drift lower. Same pattern KLK2. Now I want to highlight Penta and few stock that I think are looking quite attractive, particularly for short-term trading. So Penta, okay, if you take a look here, weekly chart have a multiple so-called hammer. So I'm not sure is, I think can we call hammer, because in order for one candle to be called hammer, the length of the tail must be at least twice of the body. So in this case, it fit. Now the reason why we did not highlight it earlier, because we don't want to get too early. Too early, that means the reversal signal is pretty much premature. Now the trend like Inari is still down. It is down, okay, like it or not, the long-term trend is pretty much down. Okay, so the for right now we are riding for the short-term recovery, and hopefully it has some room to go up a little bit higher. Now if you take a look the stock, there is certainly a strong resistance now at this kind of, which previously the strong support, now turning into strong resistance. So at falling at 50 cents, so falling 50 cents versus that current level, still offering you a decent 80 cent kind of movement, that more than 20% upside. However, I think the resistance here, if you take a look, the size of the volume profile here can be a little bit high. So that tell you that there's a resistance here can be a little bit strong. So beyond that, if you draw another level here of Fibonacci, okay, you get sense that the liquidation, there you go. a confluence 61.8, and also with the recent support turning resistance. So this is considered a quite significant resistance. Of course, if you have buy earlier, I think you can put your target slightly below 40.50 cent. Momentum is strong for now. Eventually they're going to, I think they hit already 38.2, so pull back possibly, and eventually going to test this level. Failure to break this level, that means the trend long term stay pretty much down and could drag the stock pretty much lower. So for now, do ride the current recovery, but please be careful. Watch out for any reversal signal that maybe appear on the chart soon. Okay, Tenaga has broken my key support at 9 ringgit and 50 cent. However, although the stock broken the key support level, there are something interesting that happened. Let me draw it out. Okay, take a look here. You have seen a massive divergence, okay, between Tenaga against the so-called momentum indicator. So in other words, this lower low structure has been notified by higher low structure in RSI. That means momentum is actually start to skew upward. So in that sense, it's just waiting to have a new high structure. That means at 908, the next high, the moment they break next high, 9 above 9.20 cent, 26 cent, I think the stock could turn much more positive. So for institution player, this is actually quite decent. For retailer, often Tenaga is one of their core holding for long-term portfolio. So I think at the current level, offering quite a decent entry, lower risk. Of course, when you see this kind of the reversal signal, it gives you some sort of excitement. And for me, I do think it should be able to trade gradually higher. Higher. I think the next target should be at 9 ringgit 50 cent. And of course, here, the strong resistance within 9 ringgit 60 cent. Okay, for the stock which have a big cap, 60 cent movement is quite decent. All right. Sorry, projection for Gamuda. I think we have Q&A session later, but never mind. Let me just take it quickly. I think if I draw here, simply here, set target. Okay, I'm going to set my target 1, 2, 3, 4 right here. So, and I want a confluence between another level here and perhaps a confluence of a bigger major movement here. So that means my next target should be at here. One, I think almost target already. 1, 3, 4, 5. Another should be at 355. And of course, we don't have much confluence over here. So that means the next should be this one, 368. Beyond that, I think this big candle here, that means at 200% extension, slightly below 389. So the next target for Gamuda should stand about 346, 355, 368, and 389. So that's the next target using simple Fibonacci. All right. So TSH or the so-called, okay, this one is unique because you see the way it do a retracement is considered quite mild. Right. However, here trend line here, if you draw, is it broken? Yeah, it is broken. The trend line has been broken over here. So that means momentum should actually start to be weaker. Buying momentum, selling pressure going to be higher. Buying interest actually should be weaker because of this reading. Now, if you draw a Fibonacci level, you can take a few things. So for now, I think rather than target here, because of the nature of the stock, the pullback is quite minimal compared to the rest of the stock, something you saw on the liquidation, the stabilization, or the other stock. I think the support should be here at 149 rather than all the way here at 132. I can be wrong, but for now, I think try to observe if there any strong reversal signal occur, particularly within this level. All right. Now, what else we going to look? United Plantation. All right. Okay, so your interpretation, I think, could actually start trading lower. The momentum, you can take a look at your momentum, is pretty much supported this level, but the trend has been broken. So in that sense, it should actually trade much lower. So we have quite high volume actually yesterday as the stock forming so-called inverted hammer, which is supposed to be bullish. All right, but today not confirmed yet. If the stock able to close or give you a bullish candle, then it could actually stage a rebound. Eventually, I think it could come in over here. This is considered much more stronger support. Notice the volume profile over here, and the stronger support should be at 40 ringgit and 80 cents. All right, now okay, let me go through few stock, then we answer Q&A. All right, Astro is one of the favorite because one is actually, it's not Cheah, it's conventional. The structure has been moved up quite nicely and gradually. I like the trend movement here. It can be pretty slow, and what you can see here, the intensity of the momentum here going up is quite quite strong. Because of that, this I think going to slowly hitting the upper resistance soon. That's for Astro. Berjaya Auto is one of stock that are looking quite terrific. If you just take a look at the stock purely so-called using pure naked chart, maybe no indicator and so on, take a look here. Take a look at the stock here. A simple trend line since the March low has been uninterruptible. There you go. It means uninterruptible. That's so nice. It is quite rare for you to see this kind of trend line, for Malaysian stock holding very, very well. All right. In fact, because of this pattern, I think, yeah, if you want to do here, channel also possible. That means you have 3 level of the deviation of the trend. So this one, the highest level, second, and of course the current level. So I think in terms of your creating your target structure, the stock eventually going to go up, testing here, fail, back, hitting this one, and of course eventually this upper level. But I have never seen the stock moving quite steadily in the uptrend compared to Burma's Auto for the past few months. I think, yeah, this year so far this is one of the best looking chart for the trend, right? For the trend. So because I saw this kind of uninterrupted trend, we know the support could be strong at 162, 169. So any pullback here, I think accumulation can be initiated. As long as the stock continue trading in the uptrend, I think you are on the safe hand. Break the triangle, break the trend line, however, required to act immediately and cut the losses. But for now, the trend looking quite solid. So the next target, where should we put the next target? Okay, let me just draw. Okay, I'm going to take from the major high here. Okay, so a few target that we can think of. One here, two here. So first, the confluence of here, which is the recent high 188, sorry, 184, 186. And the second part, the confluence of here 206. So at the current level, still offering, I think about 20 to over 20% upside at this current level. So this is looking quite terrific chart for me. So Jaya Auto, I think one of the stock looking good for long term, right? Long term stock. If you want to do long term, I think this could be one of the stock. Plus, our fundamental had buy too. I think the target price is over 2 ringgit as well. Now, Dufu, similar pattern compared to the Inari, but much more, has more intensity because the nature of the rebound is far more stronger. The candlestick here, you can see here is a classic reversal pattern of Morningstar and now climbing higher. So we have a gap here, and then we have another gap here, which is supposed to be good. Of course, today's candle is not yet complete. So our work right now to identify which is a strong resistance level, so that when we saw this level, we may take some profit. So riding on that, I think this is the key level. 3.15, 3.12. You can see here, there's a more accumulation being done over here. So that tell you that a lot of people who actually buying here could, at this range, could actually start to unload, those creating so-called pressure within this level. So at the current level, I think 287 to 3, one offering not much upside short term. So that means this can be your first real resistance. The next resistance should be here, 3.38. So while Dufu is interesting to trade, I think this is pretty much more on the should be on more on the short term. All right. So for this stock, where your colors will be, I think the colors can be at below the so-called recent low or this gap here at 2.5, and that gives you quite big risk versus the reward. I mean, you risk about 20 over cent to get something over 20 over cent as well. I mean, given the risk 1 equal to 1, I think trading level at the current level can be a little bit you still can, okay. I think we highlight already today, and today already goes up. So if you want to enter at the current level, it can be a little bit not attractive because it's a little bit on the high side already, unless you can get much lower price. Okay, Franken also a similar pattern. One thing for Franken, because among a tech giant that actually come down, Franken is one of the few that I really like because the structure of the trend, it look far more better compared to the rest. Right, compared to Penta, you just look compared to Greatech, compared to MPR, compared to Unisec, and so on. Franken look in a much better position. Take a look, just a simple moving average over here. Just a moving average, how you can see the major support has been, rebounded. This is actually a weekly chart, so that means the red line here is not 200-day moving average, but 200 weeks. So I mean, you are looking at very long-term kind of support. So if history repeat itself in the similar process stock, you can see here it could actually continue go higher. But for now, I think with the nature, we have to take some lesson over here, because last time when I start to come down, I highlight Franken and I think another one. Is it Inari? Yeah, which actually have decent technical reading at the time, that could maybe holding quite well for the support. Eventually, when next deck tumble lower, our tech stock also tumble. None cannot escape. Even the stock with the decent chart as well also tumble much lower. But the way they recover, the way they rebound afterward, I can tell you the difference between so-called stronger momentum kind of stock have more interest compared the other stock. So if you have to select tech stock, I think Inari and Frank can look much better in terms of the trend. Fundamental, maybe can be thought differently, but in terms of the trend, these two at least offer a significant kind of the, movement that offer you that the stock is still pretty much on the uptrend. So that's his weekly chart. So on the daily chart, if you take a look at the stock here, is pretty much structured in terms of movement. And the trend here, I think, yeah, the strong resistance is about 3 ringgit and 10 cent. And another will be at 3 ringgit and 40 cent. So this is their first and real hurdle for the stock. Eventually, it is fair for the stock to continue bulldoze all the way, break resistance. Often they're going to test, take a step back before retest again. That's the nature of the stock mostly. Okay, if the stock have strong momentum, then it can be different story. At the moment, you can see here, by the time they start to rebound, the trading volume start to be up higher. So because of that, I do think Franken and even Inari is actually in a much more better position. All right. Okay. Now, KAB is one of the stock that we highlight before, and I like the stock because one is not yet to go up, and it's sideways for quite some time. You know the deal. If the stock sideways for some time, by the time it start to build it up, then when you break, it's going to be very, very powerful break. And in fact, I think you can break my target over here. Now, it's okay. If the break, then we just revise and look for another target. So next target, For now, I do think the reason why I like, because here the stock is actually we can say consolidating gradually higher, gradually coming higher. And what I like is because the volume here, you see there is a spike every now and then, spike in the trading volume. Okay, spike here, and then flat, and then spike again, spike. So this is often a pattern that occur during accumulation level. So because of that, I do think the reaction or the volume pattern is quite attractive. So because of that, I do think the stock eventually will break the upper resistance over here. Once broken, they're going to turn their trend from downtrend here into a fresh uptrend. So the stock also have quite erratic history, particularly when they start moving upward. So you can see here, the moment there is a strong uptrend movement, there you go, one, two, few big candle kind of movement. Of course, when they come down like this too, so it's fair lah. Alright, so because of that, I think the reason why, because the stock stay pretty much in the sideway. So when there is sideway, the accumulation that you can take, the risk that you can take is pretty much lower. So that's the reason why I think this stock going to stage a breakout soon. So next will be Kenanga. Kenanga is actually already breakout. We highlight the stock. It's actually here during the first candle over here. And the good thing, because we highlight, because there is a gap up. Okay, you just break, come down, complete your return move, and then rebound with the support. You have 3 moving average here, provide some support, and then the moment you gap up, you have a so-called breakaway move. Yeah, it's a decent amount of the so-called trading volume, and then the stock just poof, balloon up. So this time, I think uptrend could actually strategic for them. Last but not least is actually Singlife. This is also one of the slow stock. I like slow stock because now it is good for those who doesn't have, for those who have a higher blood pressure like me, right? So it's more relaxed, cool kind of movement. So you have seen some sort of the baseline has been created over here, and then the stock start to build up another base higher. So because of that, I think eventually the stock gradually will test the upper resistance here. Once they break, I think the trend is going to shift. So currently we can see, let me just open this one for a quick look. Small cap rebound again within support. Okay, if not rebound, that means the prospect for small cap is not being good. So the reason why we continue to like the stock, which is pretty much at the support level, you can see here that could be one thing, a leg. Two, when the so-called small cap index start to go up further, most of the trend going to change from downtrend to uptrend. So because of that, I think we find the stock which is actually at the support level, it become much more attractive. All right. Okay. Back to you, Taka.
All right. Thank you very much, Nick. I can see that, some plantations counter, they are waiting to stage a rebound. And even though some of the tech names, right, it's in correction, right, we could potentially have a reversal as well. So, all right, still, once again, thank you very much, Nick, for the in-depth analysis of the charts. You covered quite a fair bit from commodities to tech to smaller cap names. And we'll circle back to you with our Q&A session at the end, yeah?
Right.
So just a quick mention, while you're on our website for market news, warrant terms, or any of our curated write-ups, we also have a technical chart up and available to you with 3 indicators readily to be used at your disposal. So like you see just now, Nick Ihsan, he has a lot of indicators on his charts readily available. And this is especially useful to those who struggle in figuring out what indicators to use or where to begin. So look no further than our Maybank Warrants website. So this is how it looks like. And you can see that there's a few indicators available. Firstly, we have RSI, Relative Strength Index, which is one of the momentum index that Nick Ihsan uses. And after that, we have moving average, which is also one of the moving averages, the indicators that Nick Ihsan uses as well. And he uses what he calls the gun numbers, right? And also lastly, we have Bollinger Band, all right? So these are the 3 indicators readily available on our Warrants website for you. So if you don't know where to go, where to search, how to chart it up, right? You can come to our Warrants website to use the technical charts. All right. So now, out of the several shares that Nick Ihsan has mentioned, and also in the chat, somebody asked, what stocks can be highlighted. Nick Ihsan has also highlighted 5 shares that he's rather bullish in. So you must be thinking, what structured warrants can be on your radar? So better yet, we have actually shortlisted and narrowed it down for you. We have the right structured warrants for you to realize the trading opportunities out in the market. I'll go through some of the warrants from our 3 themes for today, which is commodity, technology, and recovery and reopening. So as you can see on the table, I've highlighted Hibiscus C28, DNEX CM, Inari C1A, Gamuda C1A, and Burma's Auto C23. And also I noted that Nick Ihsan also quite like Penta, right? And we have Penta C19 as well, where Maybank IB is the issuer for Penta C19. So while I'm discussing about the warrants, you can also head to our warrants website by scanning this QR code. It will lead you directly to the homepage where there is a search box in the middle, and you can directly search the structured warrant that I'm discussing. All right, so let's move to our first one. For commodity, Hibiscus C28 is currently the longest term call warrant and has the most time to expiry, which is only due to expire in 30th November 2022. It is also one of the most sensitive warrant available in the market right now at 2 ticks, okay? So it's very sensitive to the movement of the underlying. Moreover, it has low time decay with theta days at 25. So what it means that it takes 25 days for the warrant's time value to decrease by 1 tick. So to those who do not know, Hibiscus Petroleum is actually engaged in the exploration, development, and production of oil and gas. So essentially it's an upstream in the oil and gas sector. So Nick has also said that, Maybank IB Research has initiated coverage over Hibiscus, and Maybank IB Research has a target price of RM1.90. And Maybank IB Research stated that Hibiscus is the best play for a cyclical rising energy price market. With the current rally in crude oil price, it will be the most dominant near-term share price driver. Although, crude oil price has recently corrected, dropped back down due to talks between the Ukraine and Russia, or even over demand crush concern. But the International Energy Agency has said that for the year 2022, we could expect that the average price for oil to be above $100. All right. And the next one, Nick Ihsan has also said, Dagan Exchange is the darling of the market right now. And Dagan Exchange must have piqued your interest as of late. So for those who don't know, DNEX is involved in both the tech and oil and gas sector. With its acquisition of Silterra, it has lifted DNEX net profit in its latest quarter report. This is in line with the global supply crunch for semiconductor, as Silterra is a semiconductor wafer foundry, whereas its energy segment will directly benefit from higher oil prices, as Ping Petroleum is an upstream producer as well. So what this means is that higher average selling prices increases its profitability because Ping Petroleum has a rather low break-even price to produce oil. So DNEX CM is also sensitive to the underlying share, as it takes 3 ticks in the underlying for the warrant to move by 1 tick. Moreover, it is only due to expire in August, providing you enough time to expiry to capitalize on the rise in both semiconductor exports and crude oil prices. An effective gearing of 2.9 times, what it means is that, when DNEX moves by 1%, DNEX CM would move by 3%, thus providing you higher returns. And also in a report today, it showed that semiconductor exports in 2021 hit a record high of 63 billion. Okay, and moving on to Inari. Like Nick Ihsan said, Inari fundamentals is intact, but however, the trend currently is a downside. But fret not, there might be a rebound. So Inari must be a name that is familiar to all of you and need no further introduction. Although Inari has decreased by roughly 27% year to date, Maybank IB Research maintains a buy call on Inari with a target price of RM4.77. So this indicates roughly a 62% upside from yesterday's closing price, whereas consensus target price on Bloomberg is at RM4.31, which indicates a rough upside of 46%. Inari C1A has a high effective gearing of 4.8 times. So a 1% move in Inari, which is roughly 2.9 cents, will be followed by a 4.8% move in Inari C1A. Inari C1A also has 228 days left to maturity, which may be sufficient for you to trade on the upside of Inari, since its biggest customer, Broadcom, is expected to ride on the new 5G smartphone launch cycle. So to put it simply, Inari and Broadcom is a key component supplier for the smartphone maker Apple. So Apple right now has to deal with a lot of semiconductor shortages, and Inari would definitely be a beneficiary from this, as its biggest customer, Broadcom, supplies to Apple. Okay. So for the next warrant, right, especially when you have so many warrants available, and you'll be spoiled for choices. So how do you narrow down? So for the next warrant on Gamuda, let me show you how to use our warrant comparison tool. And this feature is available on the Warrants website under the Warrant Tools tab. It is useful as a lot of warrants over Gamuda are in the market, and you would definitely be spoiled for choices. So using this tool, you can easily compare and narrow down between the structured warrants, be it exercise price, exercise ratio, theta, expiry date, and many others. What you need to take into account in comparing, we have it readily for you. So from the comparison, you can see that Gamuda C1A is one of the core warrant that is furthest to expiry date on 30th September 2022. Also, Gamuda C1A shows that it is deep in the money amongst the other three, leaving it with high intrinsic value. Also, it is sensitive to the movement of the underlying share at 3 ticks. So if you recall what I said earlier, if it's at 3 ticks, which means it takes 3 ticks in the underlying to move the warrant by 1 tick. And with the recent movement in Gamuda share price, Gamuda C1A would definitely track the share price movement of Gamuda. And lastly, Gamuda C1A has the lowest time decay, as it takes 22 days for it to erode by 1 tick. And now with the ball rolling, and Nick Ihsan has also mentioned that with the announcement of the MRT3 project, this gives rise to trading opportunity to trade on news flow, as Gamuda reported to have proposed early stage funding for the MRT project as early as end of last year. Gamuda C1A is sensitive to the underlying share and has low time decay at 22 days per tick. It is also currently in the money, which means it has high intrinsic value, while the current break-even price is only 6% from yesterday's closing share price of 3.34 ringgit. Maybank IB Research has also raised Gamuda target price today to 4.28 ringgit, which indicates an increase of 28 cents. So to wrap it up, Gamuda C1A is suitable for you to trade on future news flow regarding the tender of contracts for MRT3 project. And lastly, we have Burma's Auto, which is also Nick Ihsan's favorite, correct? And recently, Burma's Auto reported a solid third quarter financial performance. In a Maybank IB research report dated 11 March last Friday, the analyst sees exciting outlook for Burma's Auto, just as how Nick Ihsan sees that long-term trend line intact and hold well by B Auto. This is because the analyst expects it to see improvement in performance across Mazda, Peugeot, and Cheah brands. B Auto is one of Maybank IB Research key auto picks with a target price of 2.25 ringgit. Share price of B Auto can also be expected to be driven on the back of SST holidays up to June this year. So B Auto C23 is due to expire only in 30th August 2022, which means it has adequate time to maturity to realize the robust demand through leveraging on the extended SST holidays until June this year, which means it will drive stronger sales for B Auto in the fourth quarter. Further, Malaysia transitioning into the endemic phase recently will be of use, to increase traffic to B Auto showrooms to help secure better sales. With a high sensitivity of 2.4 ticks and high effective gearing of 4.3 times, expectations of a strong fourth quarter performance for B Auto will be well tracked by B Auto C23. So, since Nick Ihsan has also covered a bit of plantation counters just now, for our new warrant issuance tomorrow, for you to realize your trading opportunities, with the crude palm oil prices rallying as well, plantation call warrants over shares such as Balstead Plantations, Genting Plantations, KLK, Sime Darby Plantation, Ta'an, TSH Resources, and United Plantations are available for trading tomorrow when the market opens. Also, if you have an opposing view from Nick, Ihsan, or me, do not worry. DNEX and Inari, we will be issuing 2 put warrants for you to capitalize on the downside, namely DNEX HA and Inari HA. So this is for you to express your views if you think that DNEX and Inari has more downside or has more correction to go. And do note that these are the first put warrant available over these shares. We are the first issuer in the market to issue put warrants on DNEX and Inari. So if I may, I would like to circle back to the table earlier that I showed to have what warrants to be on your radar, because I would like to touch on Penta C19, since Nick Ihsan has mentioned that Penta C19 is one of his favorite. And as you can see, Nick Ihsan mentioned that it is a short-term trading, right? Penta is meant for short-term trading. And you can see from here that on the table, Penta C19 is only due to expire in 18 November, which means it has sufficient time to maturity for you to realize your trade. And also currently it is in the money of 13%. And it's also quite sensitive at 4 ticks, right? At 4 ticks. So it takes the underlying share to move 4 ticks for Penta to move up by 1 tick. And also you can see that the theta days is pretty good as well, because 21 days means that it takes 21 days for the warrant to erode by 1 tick. Another warrant that I like to touch on as well is Dialog. Nick Ihsan also mentioned that Dialog is also is skewed towards institution buyers, but retail investors like us can utilize structured warrants to actually help realize all these trading opportunities and the bullish bias, correct? So Dialog C76 has an exercise price of 2 ringgit 80 cents, while it's only due to expire 31st October this year. And you can see that sensitivity is rather good as well at 4 ticks. And if Dialog move by 1%, Dialog C76 will be able to move by 3.6%, which is pretty good, considering if a 1% move in Dialog, you get 3.6% in return. And as well, the theta over here has low time decay, given that theta is at 24 days per tick. All right. So for those in the chat box asking for certain shares, certain underlying security, and you notice that on our website we do not have warrants over these shares, you can always use our tool called Structure Your Warrant, and you can actually drop us what warrant that you would like us to issue, be it a call or put, whether it's 6 months or 12 months, and also whether if it's in the money, at the money, or out the money. You can always write into us. Feel free to write into us, and we will attend to you via email. All right. So I think this wraps up for my presentation. And to those who wants to have the slide, don't worry. I will leave the QR code here for you, and you may download the slides very soon. After this webinar has ended, we will upload the slides onto the website. So to those who haven't visited our website yet, you can always scan the QR code, or you can just type in your URL link at warrants.maybank2u.com.my. And the laptop you see on the left will be the home landing page that you see. So don't be shocked if you see something brand new and fresh out of the box. All right. So I guess that ends my presentation from me, and we can go ahead with the Q&A. How is that, Nick? Is that okay?
All right. Okay. So Q&A, I think we got some Q&A in the Q&A box, some in chat. So let me go through a few on the Q&A box first. Projector for fintech. Fintech, I open a chart. Sorry, I have to share.
Yeah, no problem.
So fintech, the stock, and I think technically it's very challenging for us to forecast or to read the stock, which has been movement like sikat. This one we call counter sikat because the movement is quite very compact, compressed, congested, and so on. So technically, it's very hard to read stock already. But in one way, you can see the stock is pretty much on the downtrend. But recently, it started to consolidate, at least between on sideways for a while. So, is there any room for further upside? So far, I have not seen any strong pickup in volume. It can pick up here, but there's nothing changed so far. So I think the stock pretty much will continue at least in the sideways basis for now. All right. What is significant between what we call that EMA 9 and 14.5 in your RSI? So EMA 49 and 45 is this is actually short term short-term moving average. 45 is the another long term. So eventually the reason why we put two, we just want to see whether the momentum is actually has changed for short term, is decent, improve, or is that going to increase further, or the trend for the RSI has start to change. Because we thought most of the RSI we thought it's just reading momentum, but eventually we can actually looking for the trend as well in the RSI. So that's the reason why I use 9 and 45. We just combine with what we use on the chart. So eventually this number I get from my Sifu, my Tok Guru. She actually shared this kind of number. The reason why she's used it is pretty much got to do with the gun as well. Connie Brown, if you know her, she one of the writer for the gun book. All right, now a tech stock good to buy or hold now? All right, now here are the question. Let me just open up the text. Tech stock by all means is still downtrend. If you want to buy, I think the nature, if you want to buy, I think the focus should be on how much you want to buy. I don't think it's a good idea to splurge and everything that you want to buy. So Ecovest weekly chart look decent, building a new baseline. I like the stock when they are trying to move like this. They come down and suddenly not. This is kind of like your trend angle here, and this is different compared to here and compared to slope here. So this is kind of slope. That means when you saw this kind of pattern, often the selling pressure has started to ease. So this could create so-called bottoming pattern. But for now, if you look on the chart, it could be trend start to moving up, but there is a problem here. This is the stock I saw yesterday in my scanner, but I didn't highlight because this range, because this. So I'm waiting for the stock to break, okay, turn back, reverse, do a return move, a new base, and eventually start. And when I saw this kind of movement with a higher volume here, then I start to highlight the stock, particularly of technical perspective. For now, I think with this kind of movement is still pretty much what we call that tricky or risky. So if you want to buy, I think the risk color is quite big. So hence the reason why we didn't highlight it yet. All right. Janku sideways, pretty much sideways. Is there any bullish? No, there's no bullish divergence. No, not much. There's not much. I think it's skewed to be much more sideways. Can recommend idea to be included in the online global platform? I think yes, we can. Let me get some feedback. I can pass some the feedback. We have a lot actually. We have Singapore market, Vietnam, Thailand, and so on. But we don't have a centralized system so far. But it can be a little bit a technical challenge. But beyond that, or maybe budget, so some budget constraint. But beyond that, if we able to pull that, once centralized, under one platform, it can be good, particularly for the, Asian. So I think, I think feedback going to be forward to the management. Can be summarized which stock is good for long-term investment. I think we highlight earlier will be one is Astro, Berjaya Auto. I think is one thing. And I think, yeah, these two actually are more skilled to do on the long term. DNet also for now does look offering more on the long term. High viscous can be a little bit tricky because it's oil play. If the oil can come down further, it can be traded at the much lower value, but beyond that trend, it's still pretty much up. But if you want to bet for long term, I think Astro Berjaya Auto still offer quite a significant upside in both technical and fundamental. Any feedback on rising tech? Rising tech movement is quite gradual, but yep, slowly and gradually. I think about to hit our first target already. The next target here, momentum still strong. We can take a look here. Momentum exercise still doing okay, and but the movement is quite gradual. Okay, volume is quite slightly weaker compared to before, but the trend reading, upcycle remains steady. So hopefully they can break this resistance soon. Can comment on hex industry? Yes, industry. Let's take a look. Check the industry. Oh, cantik. Cantik. And this is February. This is March, about a month. So okay, so a month. I think we can call this what we call that a flat pattern. So I think about to break out soon. So I think the stock looking good. Yep. It does looking good. So stop loss should be between 25 cents to 225. Your risk target should be at 325. Next target should be at this level. Next target should be between at 355 and 375. Yep, that's look good. Big short, however, is rebounded quite strongly. I think the next target is about 7.80. So this is the line that I drawn and sent to one of the GLC who are asking about the stock earlier. So this is the target that I draw for them. All right. Okay. So I think that's it for me. Back to you, Taka.
All right. Thank you very much, Nick Ihsan. Thank you for doing the charting on the fly, on the spot. All right. Okay. All right. So thank you everyone for joining us today.